you can find a professional fund house or a fund manager who can beat the returns of the AI system that we have built. If you want access to this premium AI tool and also want to learn how to do research and analysis using this tool, come join me in my live masterclass happening this Sunday. Register now with the link given below.
To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Well, 2 hours to go before we round up this week, and important cues lined up. The Reliance AGM will begin in about 2 hours, in about 30 minutes from now, and then at 4 o'clock we've got the Q1 GDP. And Surbhi is here with me. I'm Reema Tendulkar, and you're watching Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. Not at the day's low, which was about 24,464, but not quite at the highs also. Again, from the higher levels, we are seeing a bit of selling pressure. The Nifty is holding on to 24,500, but considering we've had 4 days of losses. I mean, in the last 4 days, the Nifty is down close to about 600 points.
Yeah.
Today's recovery is very, very feeble. So in that sense, disappointing.
It's, not much of a recovery really, Reema. I mean, the market's been managing 20, 30 points here and there right from the morning. And the net result is we are flat. And even at a broader market level, at least at an index level, you don't have a sense of momentum at all, either on the way up or on the day down. Listless, directionless, call it what you want. In fact, even broader stocks, if you talk about today's decisive trend or, if you want to pick out a sector of the day, the only story that comes to mind is really consumer. And that's all thanks to the proposed GST cuts that we've been reporting right from yesterday that have been that are part of the GST bill, and they go on to the GST Council. So the FMCG index, even stocks beyond FMCG, other parts of consumption, whether it's footwear, whether it's apparel, bits and pieces, it's showing up here and there. But aside of that, there is no real directional movement, neither in the market nor in the stock that we're going to focus on. Reliance, for the time being, has been really, really flat. And of course, it's going to be all about the Reliance Industries AGM starting 2 p.m. The stock itself is at an interesting trajectory. Actually, it's outperformed the Nifty. If you look at it on a 6-month horizon or even a 1-year horizon, Reliance has done better. 6 months, it's up 15%. The question is, what next from here? Will we hear something that could take the stock in a decisively higher trajectory from here on? And obviously, that will spell great news for the market as well. So that's, of course, the consolidation that the market as well as Reliance have been in the last 12-odd months. So let's now talk about what we are covering on the show today. It's going to be all eyes on the Reliance Industries AGM. Mr. Mukesh Ambani will be beginning that address in just under 30 minutes from now. So we'll, have a full tilt focus on Reliance Industries. In fact, we'll have experts joining in as well to decode all of those announcements. The Nifty, of course, has been holding on to a very, very range-bound session, absolutely unchanged, almost unchanged, 12 points higher. We'll put the spotlight on a lot of these consumer stocks which are buzzing the trend, which are bucking the trend, which are still buzzing around. So we'll have Mangalam weigh in on some of the cuts and the anticipation as they're stacked up right now. After that, of course, we turn full focus on Reliance Industries, from the retail business to geo, oil to chemicals, new energy, a lot of excitement and announcements that the market is anticipating and watching out for. So all that's coming up. But let's get started first with the technical calls as we are looking at trade in the last 2 hours of the day and the week. Nagraj Shetty is with us. Nagraj, great to have you on. So tell us, absolutely directionless as far as the indices are concerned. Would you have any trade, Nifty, Bank Nifty, if not the indices, and what about stocks?
Hi, good afternoon, Surabhi. Nifty, no doubt, has been in a downtrend over the last 4-5 sessions. The way market has declined with a strong momentum, it is indicating that today's bounce is just lacking the strength, and I'm not expecting any bigger upside on this pullback rally. But overall, the trend remains weak. The important support has been broken. The gap area of around 24,700 levels of 18th of August has been decisively broken, and Nifty is currently trading lower below that gap support. So I'm expecting Nifty to come down further. The next important support to be watched is around 24,300 to 24,200 levels, previous swing lows, as well as 200-day EMA. These are some feasible base for the market to bounce back from the lower levels in the short term. And the Bank Nifty as well. Bank Nifty was showing some sharp, violent declines, though placed at the 200-day EMA. I'm not expecting any significant recovery is shown in the chart, and eventually we could see Bank Nifty coming down below 53,700, 600 levels, and the next lower supports to be watched is around 53,000 for the short term. I have a mixed trend in the stocks in terms, one is from the long side, one is from the short side. And the CG Power chartically has been in a larger consolidation phase over the last few months, in fact, and today made an attempt of breakout of the consolidation. Technically, we believe after the range-bound action, whenever the underlying moves up with a strong buzz and a volume, that is a breakout candidate, and I'm expecting this stock to move up further. So one can look to buy CG Power, currently trading around 695. The immediate target would be around 740, and one can place a stop loss at 665. Second one is from a sell side, CESC. Chartically, CESC, after range-bound action, broken down sharply in the last few sessions back, and currently the weak trend is going on. Currently trading around 152.70, one can look to sell at this point of time. 144 is going to be the next support, which is going to be the next target downside target for these stocks, and one can place a stop loss at 157.
Thank you very much for that. The mid-cap index is in the red now. The advanced decline ratio, which at the start of the trading session was about 5 stocks advancing for 2 in the red, the gap between the two has also narrowed considerably. Now 1,500 stocks in the green for 1,200 in the red. Though individual stocks catch your attention, LG Rubber, big volumes, Jindal Poly and Jindal Worldwide have a double-digit gain. Apollo Microsystems, very large volumes, 40 lakh shares, 8.5% uptick on that. Advanced Enzyme, Relaxo Footwear, Idea Forge, Aether Energy. Ola has been capturing all the attention in the headlines. It got that PLI for its Gen 3 scooters. Ola continues to do well, but today you are seeing that up move coming through on Aether. But in the large cap stream, what dominates the action are many of these consumer names. So names like Colgate, Britannia, ITC up 2, 3, 4%. Mangalam is joining in, and he's going to outline the stocks which will be impacted with the upcoming GST rejig.
Well, the message is fairly clear. Small ticket consumption needs to be boosted in our country, and that was something that was unilaterally, focused on by the budget as well, that after the RBI policy coming in and now from the GST as well, Prime Minister's speech on Independence Day. What we gather from our sources, as Timsy has been reporting, is that items of daily use, the essentials, we have the likes of talcum powder, you have soaps, you have toothpastes, and you have biscuits, etc. All of them would be brought to the 5% bracket, which would spur consumption at least at the lower end of the spectrum, and that is what is expected to boost volumes for a lot of the players who have been parched for volume growth. The likes of Britannia, Dabur, you have HUL, you have Godrej Consumer, all of them in focus in today's trading session, doing well. And as we move towards the festive season, there is expected pickup in the revenue for these companies as well. Even if you go down the discretionary side of things, where footwear is concerned, pairs which are priced sub 2,500 rupees will be actually taxed at 5%. And in terms of volumes, this 25%, 2,500 rupee and below accounts for more than 90% of the overall country's organized footwear market. So to that extent, players like Bata and Relaxo are buzzing around in today's trading session as well. So we'll watch out for small ticket consumption items where the focus is on by the GST committee. So any outcome that happens on September 4th, which further rationalizes these rates, as Timsy has been reporting, would be a positive.
ఈ డబ్బాలో ఏముంది?